As promised, since you guys got 200 likes in the last video in 48 hours, here's a second 3 stocks I'm buying for October 2018 video. Let's go. I really appreciate the support on the last video, guys, which is why I wanted to produce this as quick as I could. And I hope these 3 stocks that we cover today will kind of give you a bit more insight into the stock market. Not everything has to be a tech stock, and all 3 of these companies today are non-tech companies. In fact, 2 of these might actually be seen as a value play. So for value investors out there, these are some opportunities for you to take a look at as well. But can we get another 200 likes on this video? I truly appreciate that. If you haven't already, hit that subscribe button down below and join this community. But anyways, let's get into our picks this month. And the first one that we're going to talk about is actually a value pick, like I just mentioned. And it's a company that I've been eyeing for the last few weeks, and I think it's finally at a point where we can take advantage of the price. So the first company is called General Mills, ticker symbol GIS. So General Mills is actually one of the largest players in the consumer space, and they have tons of recognizable brands. Brands like Cheerios, Haagen-Dazs, Yoplait, Pillsbury. These are all brands that we've grown up with, these are all brands that we recognize, and these are all brands that are very strong out there in the consumer space. However, the consumer space is fairly crowded when you look at cereals or ice creams. So a lot of these brands really go under the radar, but they're ones that we recognize and we know the brands right away. That being said, the biggest change with General Mills recently, and honestly one of the main reasons why I'm looking at this company, is because of their acquisition of Blue Buffalo. So Blue Buffalo, if you're not familiar, is a popular pet food brand. And like we said, General Mills recently acquired them, but over the last few years, Blue Buffalo has been building out their brand and building out their reputation in the food space for pets. You can almost think of it as a better alternative and a more premium option, similar to other brands that General Mills owns, like Haagen-Dazs, which is seen as one of the, if not the most premium ice cream brand out there. But even with all of this seemingly good news, things moving in the right direction, General Mills has had a horrible year this year so far. They are down from a high of around $60 per share, now down to around almost $40 per share. So the way I see it, this might actually be a massive opportunity for us to actually get in at a reasonable price in the stock. They also pay a very hefty 4.55% dividend yield. So for you dividend investors out there, this is another one that's a value play as well as a dividend play, as well as a potential growth play. But just keep in mind that over the next few years, they may either keep the dividend as is or reduce it, because they are working on a few things like lowering their debt, for example. Anyways, let's move on to what analysts think about General Mills. So as we can see here, there's not a lot of coverage really, but the consensus is mixed, and most are either at a buy or a hold with the stock, with the price targets in the high 40s or low to mid 50s. So this provides some pretty decent upside to where the stock is at right now, and as we'll see in a second with the technicals, this might actually be a good opportunity to get in and take advantage of a potential ride up in this stock. So looking here at the technicals of General Mills, we see that we're close to this $40 support level. In fact, we may touch this at any point. In fact, we may have already touched this after recording this video. And this support level dates back to 1991. So it's a very, very strong support in this stock. And if it cannot hold, then the next target for the support would be around $35. And that support level dates back to 1988. So these are very, very strong levels that the stock has come back down to over the last, 20 years, 30 years or so. So as you can tell, the stock is a very old company, but it is a stable company. It has been around for a while, and it most likely will be around for a very long time. So it might not be a bad idea to take advantage of the recent weakness out there in this stock and scoop up some shares, even if it's for your long-term portfolio. I'd actually love to go more into the fundamentals of the stock, because like I said, this is what I'm looking into personally for the long term for myself. So if you want to see a deep dive or something on General Mills, let me know in the comment section down below, guys. Even if this doesn't really move too much over the next few years, that dividend yield will make up for it. A 4.55% dividend is not too shabby, and if we do go a little bit lower, you can always add more into your position to average in at a lower cost basis. Alright, let's move on to our second pick here, and this is a gaming company. It's a gaming company that's been hit incredibly hard in the last few months, and it's Electronic Arts. So Electronic Arts, EA in short, is actually a massive games publisher, and they're most well known for their titles like FIFA, Battlefield, Need for Speed, and even other sports games like Madden. So all the hype really around their games this year is surrounding FIFA 19, of course. FIFA 18 was a huge success because the World Cup was this year, so usually when they have the World Cup, they have a lot of sales, they have a lot of people join, play the game online, all that stuff. So FIFA 18 was a success, FIFA 19 is just being launched now. Another big game that investors are focused on is Battlefield 5. Players and investors are excited for this because this is supposed to support kind of like a Fortnite style battle royale, kind of, you know, everyone go in there, mash up and fight. And that's something that's expected to drive a lot of new players and existing players to this game, Battlefield 5. However, the biggest drawback here is that this game has been delayed into the late part of the holiday season, most likely. So because of that, investors are worried that EA will not be able to take advantage of the spending that usually goes on during the holiday season. And as a result, their competitors are going to have much better sales and profit than EA is. So over the last few months, EA has been under a lot of pressure and a lot of negative press with something called loot boxes, which are, if you're not familiar, essentially these boxes or crates that you can purchase, and you're gonna get kind of a random assortment of items, merchandise, clothing, whatever it may be. And of course, all these things that we're talking about are in-game purchases for your virtual characters and your virtual game. So like I said, there's been a lot of negativity around this, and there are countries like Belgium that have come out and actually banned EA from selling their games there because of these loot boxes. So the reason is because these loot boxes kind of resemble gambling tendencies where you don't know what you're purchasing, you're paying for something, and you get kind of like a surprise in return. So Belgium sees this as kind of a gambling, kind of people can get addicted to this over the long term, might not be good for the country, not be good for their citizens. So a lot of other companies like Take-Two and Activision Blizzard have complied to this, but EA has not currently done that. And really, this is the main story surrounding EA, and because of this is when the stock really took a big hit. And if you do believe that this is kind of just short-term weakness and EA is going to get back to where it was before, this is a great opportunity to pick up these shares at a massive discount. So looking here at Analyst, which is once again brought to us by tipranks.com, you can sign up there for absolutely free. Check out the links in the description. I'll link to each one of these stocks that I have talked about today, and you can see more details on what the analysts think there. So as we can see here, most are really bullish and a few are neutral. However, the consensus price target sits at around $141.76 per share, which is about 20% higher than where the prices are right now. So clearly you can see that analysts have not really turned bearish on the stock. And in fact, they're still, sending in their reiterations, even upgrades in some cases, to show that they're still bullish on this company. So this is kind of a typical play where you kind of have to go against the grain. Right now, the media is trying to portray this as a very negative stock. But if you can see value in this stock and value in this company, you'd have to go in, you'd have to pick up these shares. You might lose in the short term where you can always average down. But if you believe that this company can turn things around and Battlefield 5 will be a huge hit, FIFA 19 will be a huge hit, then you'll see this back at $140, $150 in no time. So now let's hop over onto the charts here for Electronic Arts because there's a lot going on here. So as we can see, we're currently sitting below all of our moving averages, which tend to be a bearish sign for stocks. However, we might have found support on the 100 moving average on the weekly, which sits at around $110 per share, and the stock started to rebound from that price point. Now that being said, we also have to get past the previous support, which is now a resistance level in the stock, which will be a challenge unless we can get a catalyst to really push us higher. Now this catalyst could be something like good news around a new game that they're releasing, maybe games won't be as delayed as they were expecting them to be, maybe sales of FIFA 19 are incredible, anything that can really push the stock higher. But you have to be cautious here because it could take us up to next earnings report or maybe even the earnings report after that to really push EA back into an uptrend, back into a healthy move and kind of hitting all-time highs. However, if you look at the gap that EA has created over the last couple of months or so, and considering the fact that we're going into the busiest season of the year for video games, which is of course the holiday season, this might actually be a massive opportunity to get into some EA for a decent entry in the stock price. So I hope you guys enjoyed the first two picks. And before we get into our third pick, I want to remind you to join our VIP group if you haven't done so already. So if you're interested in figuring out what stocks I'm personally swing trading, when I buy them, when I sell them, what a profit I make on them, all of those details, you can find that out in the VIP group, as well as get access to my personal long-term portfolio as well as my swing trade portfolio. If you're interested, there will be a link in the description. If you don't want to join the group, I've also launched a Patreon page where you can go and support the channel if that's something you want to do. and you'll have access there to a tier which will give you access to my long-term portfolio to see exactly what positions I'm holding for the long term. But anyways, getting on with it, into our third and final pick for this month is a company that a lot of us have used, a lot of our parents have used. Anyone who's really purchased a house has probably used it at some point, and really anyone who's ever painted something before has used it at some point. And yes, it is a paint company, and it's Sherwin-Williams. So if you ever painted before, you know, like whether that's regular painting on the wall or spray painting, you've most likely used one of their products. They're also involved in automotive painting, automotive finishes, where they develop, manufacture, and distribute paint and finishes for cars. It's an extremely strong brand and has been pretty much the dominant player in this space for many, many years. And recently the company has been hit with a bit of weakness, which is why we want to take advantage of this. So if we look here first at what analysts have to say about this company, we can see that the stock is fairly valued in their eyes. However, recent analysts that have come out with this stock have given a price target of $500 or more per share. So the more recent analyst upgrades have been a lot more bullish, which gives us a lot even more upside in the stock. And now if we look at the charts here for Sherwin-Williams, we can see that we're coming back down to a very key support level in the stock, which is near the 50-day moving average, as well as a psychological support, which is at $450. So for those of you that don't know, typical psychological supports are usually at round numbers, so like $400, $500, $450, those kind of things. People usually set stop losses at these psychological supports, and that's why it's typically seen as a support level. So now based on this recent pullback, it actually provides us a great opportunity to get in for a swing play, or even for a decent entry for a long-term holding if that's something you want to do to diversify your portfolio. You can't really get much more diverse than a paint company here. There's not many other competitors in this space. And like we said, this is one of the largest players in the space. And it's a completely different market from tech altogether if that's something that you're very heavy into. So it may be worth taking a look at just for some diversification in your portfolio. They also do pay out a dividend, and it's really under 1% right now. So it's not something that I would personally be looking to enter the stock for. But that being said, the reason I wanted to talk about it today was because it is a big company. It is a well-known company. However, it does fly under the radar. There's not many YouTubers or people in general that really talk about this stock, and its performance has been phenomenal over the last year. And with the economy thriving, people buying houses, people buying cars, this is one of the companies that actually takes advantage of that and profits massively from that. So that's something to consider if you do want to enter this even for a long-term position. So I hope you guys enjoyed this bonus video for stock picks up this month. I hope you enjoyed this video as well as the previous video. Drop a huge like. Let's get 200 on this video. Don't forget to subscribe. Don't forget to join the VIP group if you haven't already. But either way, guys, I'll see you in the next one. Peace.